Hello, my name is Brandon Wendell, and I'm a Master Instructor with Online Trading Academy. Today I want to talk to you about something you can do with some of your investments to generate additional income and possibly even reduce a little bit of your risk in those positions. Most people, when the markets start to go down, they start to look at things like averaging down or adding to these positions that are moving down in their price. Well, what I want to suggest to you is something you can do that actually puts additional income into your pocket while reducing your risk just slightly. We have something called a covered call option. And with a covered call option, you actually own the underlying stock, but then sell call options against that stock. Well, what happens is when you sell something, you receive income for selling that. Well, what's the risk? Very little altogether, depending on how the options are playing out and how your analysis is done. Overall, the way that options are in India, they're not settled by giving away your stock or transferring stock. What happens is they are actually cash settled, and therefore, when we are doing a covered call option, even if the price goes above where we want it to go, we are going to be able to offset the potential losses with the gains in the underlying stock that you already currently own. Let's take a look at Reliance. Looking at the chart of Reliance, we can see that it's been in quite a bit of a range since mid-2009. Overall, Reliance hasn't really gone down below 880 rupees and hasn't gone above about 1150 rupees. So it could be pretty safe to say that if you own this stock, you're probably a little frustrated. It hasn't gone very far, very much. But you could generate some steady income month after month with putting in just a little bit of capital as an outlay. One of the things we could do if you own the stock is sell a call above the 1150 price level. Let's see how that looks. If we take a look at our chart and take a look at our watch list here, you can see I have several call options. These are April and March call options. Unfortunately, April doesn't have a lot of volume, so I'll go ahead and delete that. We also have to make sure that we have the ability to trade that particular option with other people who are willing to trade it. So overall, let's take a look at this 1150 call option for March of 2011. Looking at that call option, you can see it's currently trading at a price of 1.75 rupees. That means if we go to sell this, we would be able to collect a premium of 1.75 rupees for every share that we sell. Well, let's take, for instance, the minimum size that you're allowed to sell on an option, in this case, is 250 shares. If you multiply 250 times that 1.75, that tells you you'll be able to take in a bit of premium even if your stock goes absolutely nowhere. Now let's imagine that you bought your shares at 1,000 rupees. Okay? Right now they're trading at about 985. Well, overall, if you bought at 1,000, you actually reduce your cost basis just slightly by 1.75 rupees per share. So even though you might be in a slightly losing position, you have collected some premium and you've also reduced your cost basis, reduced your losses slightly. If the prices end up going up, let's say they go up to 1,100 rupees per share. Well, then overall, you gained in your stock holding, but you're also going to be gaining from collecting that income, the premium. Overall, if you keep doing this month after month, you can lower your cost basis by over 1 rupee every month by selling this premium for doing absolutely nothing but holding the stock. If you do this with a stock that also pays dividends, well then you actually increase your rate of return because you'll be receiving the money from the dividends. Now what about the risk? Now let's see, if we take a look back at our chart once again, where we can see that if the price goes above this 1150, you would lose in that option because you sold the 1150 call. You lose when the price goes above that level. However, because you own the underlying stock, for every rupee that you lose in the option, you actually gain 1 rupee in your stock position. So at the end of it all, you lose almost nothing other than commissions and a little bit of time as well. This is a very relatively safe type of strategy for investors to generate some additional income depending on how strong that resistance level is and what time frame they're willing to do this. Well, for more information on options, I highly recommend that you get some education at one of our centers at Online Trading Academy. And until next time, trade safe and trade well. My name is Brandon Wendell, and I hope to see you soon.